Hi everybody, welcome to my YouTube channel. My name is William Bishop and I am an investor. I'm here today to tell you about my background, why I got into investing and how you can too. So when I was 13 years of age, I was at school and I was confronted with my choices and I had to make decisions about what I wanted to do as a future career. Around the same time, my dad, who is not an investor by profession, was interested in investing any spare money he had into the stock market. His method was by reading the newspapers, finding out what companies were recommended to buy, and he would buy them. I asked him, "Dad, how do you know when to sell the companies?" He said, "Don't worry, son, I will sell when the journalist tells me to sell." Well, as time went on, we realised the journalists don't tell you when to sell. They just keep recommending different companies to buy. Well, I decided whatever job I did in the future, when it comes to investing my money, I wanted to be able to make the best decisions I can. And I decided if I need to make the best decisions I can, then I need to know more about it. And so to further develop my knowledge on investing, I went to the University of Durham. In 1999, I enrolled in the BA Honours Business Finance programme and I spent 3 years studying business and finance. The business side of things covered areas such as management and marketing, how to run a business. The finance side covered areas such as corporate finance, macro and microeconomics, and stock market investing. After 3 years at the University of Durham, I knew that I wanted to further develop my knowledge. However, my credit card was full, my overdraft was close to the limit, and so I couldn't go to university again straight away, so I took on 2 jobs. In 2003, when my credit card was clear and I was out in my overdraft, I enrolled in the MSc Investments programme at the University of Birmingham. The investments programme built on my knowledge of finance from the University of Durham, and it further strengthened my skills. However, I acknowledge that we never stop learning, and so after taking on both of those degrees, in 2010 I decided to enrol in the CFA programme. The CFA programme is from the Chartered Financial Institute. It is a very well structured, very deep course in investing, and it is something I would recommend to everyone who would like to take an investment career. I have now been investing my personal money for over 18 years. I began in 2003, around the same time when I enrolled in the master's degree at the University of Birmingham. From 2005 onwards, I began investing for my family and friends. However, I always wanted to help as many people as I can, and so in June last year I opened an account with Etoro. Etoro allows me to invest on their platform, and by keeping my profile public, others are able to copy my investments. 2 months after I opened my Etoro account, I enrolled on the Popular Investor Programme, and during 2021 I was recognised as an official Etoro value investor. Okay, so let me tell you about my strategy. I will run through these points and then I will go into more detail. I am a value investor and I invest in quality companies. I use fundamental analysis as my investment method, and the asset class I invest in are equities, also known as the stock market. I invest in companies based in the US, the UK and Europe, and I invest for the long term. To me, the long term is more than 5 years. So let's go through those points. Warren Buffett, who is widely regarded as the world's greatest investor, has a quote which goes, "I would rather pay a fair price for a great company than a great price for a fair company." As a value investor, we always pay a fair price for the company. We don't want to overpay for a company, no matter what the company is, because if we overpay for it, in the shorter term, the share price could go down to a more reasonable level. And if we overpay, we're not going to get great returns. So we want to pay a fair price for the company. We also want to invest in great companies. To me, a great company is one with a strong track record over the past 10 years and also has the potential to grow in the future. So I use fundamental analysis to identify companies whose revenue, earnings before interest and taxes, net profit has grown consistently over the past 10 years at a rate that I'm happy with. When I find companies that tick all those boxes, I go into deeper analysis, looking at the balance sheet, the cash flow statement of the company for the past 10 years to identify how the company has grown, how much cash it generates, what's its return on invested capital, its return on assets, return on equity, and I also look at other metrics. I focus on companies in the US, the UK and Europe because I have a deep understanding of the accounting systems in those areas. I don't invest directly in companies outside of that area because I'm not 100% familiar with the accounting techniques, and so I might not be able to add value by investing outside that area. So I focus on the US, the UK and Europe. I invest as a long-term investor. I look at myself as a business owner, and so a business owner who owns a private company is not interested in selling today, tomorrow or the next day. They can if they want to, but they're more interested in how the company can develop, how it can grow its revenue, how it can grow its profit over the next series of years. That is the approach that works for me, and so that's the one I've taken for the past 18 years and continue to do so in the future. I use fundamental analysis to identify quality companies, and I invest in companies with a strong track record, as I've just mentioned, as long as their share price is attractive. Again, I don't overpay. To identify these companies, because in the US, the UK and Europe there are thousands of companies, I use a stock screener to narrow it down. I tell the stock screener some areas that I'm interested in, then narrow it down to a smaller universe of stocks that fit my criteria. And then I go to the company's investor relations page. One by one, I go through those companies until I find something that I'm interested in. I also keep abreast of industry news via various investment websites. And influencers, as I've previously mentioned him, it is no surprise that I am heavily influenced by Warren Buffett, widely regarded as the world's greatest investor. So, how have I got on? I've talked about being a long-term investor of 5 years or more. And so here I am to present the past 5 years results on my portfolio. So these are annual results from 2017 to the present day. In 2017, my portfolio returned 16.6%. In 2018, my portfolio made a profit of 8.6%. 2019, my portfolio returned 33.6%. In 2020, my portfolio made a gain of 27.5%. And in 2021, my portfolio is up 13.5%. Now, there's an asterisk there, and that is to let you know that the returns for 2021 are year-to-date returns up to and including the 19th of October 2021. Now, you might be wondering, why the 19th of October? Well, today is the 20th of October, and so I'm presenting as much of the year as I can up to this point. 2017, 18 and 19 and 20 are from my portfolio returns in my private account before I joined Etoro, and the returns for 2021 are the returns on my Etoro account that the whole public can invest in. Now, I must warn you that past performance is not an indication of future results. Trading history presented is less than 5 complete years and may not suffice as a basis for an investment decision. If you do ever decide to invest, your capital is at risk. Portfolio performance alone means nothing without comparing it against a benchmark. The benchmark I use is the S&P 500 index. The S&P 500 is made up of the largest 500 companies on the American stock market. Warren Buffett advises that if you don't have the time or the inclination to research companies yourself, then invest in the S&P 500. Doing so, he says, is investing in America, which has done pretty well to date. It's not the oldest country in the world, but it certainly does have the largest economy. The companies that make up the S&P 500 have done well in the past, and the belief is that they will do well in the future. Now, the performance period that I presented earlier, 1st of January 2017, is presented here for the S&P 500. $10,000 invested in the S&P 500 index since the 1st of January 2017 would now be worth $20,187. So, in just under 5 years, you have more than doubled your money. I'd be happy with that. However, $10,000 invested in my portfolio since the 1st of January 2017 would now be worth $24,482. And that is a difference of $4,295, or 42.95% of your original investment. Now, I don't want to frighten you with numbers like $10,000. You don't need to invest that much if you don't have it. Thanks to technological innovations and the internet, you are now able to invest much smaller amounts than when I started my investing journey in 2003. For example, on Etoro, you can invest in a single company with as little as $50, or you can invest in a popular investor, such as myself, for a minimum of $200. The amount you invest does not affect the conclusion here that by investing in my portfolio rather than the S&P 500 index over the past 5 years would lead you to have an extra 42.95% of your original investment. If you've been interested in what I have to say, then you can find out more about my portfolio and myself at etoro.com/people/WM Bishop. Or if you're already on Etoro, you can search for me with the username WM Bishop. My email address and Twitter handle are on the screen, and my YouTube account is Long Term Investing. I will be bringing many more videos to this YouTube account, so if you like what you see, please give the video a like, subscribe to the channel, and you'll see more of me in the very near future. Thank you.